Good day, and welcome to your Global Market Outlook for Wednesday, February 4th. Today's session is packed with critical data. We are looking at European inflation data, U.S. labor and services indicators, and commentary from the Federal Reserve. We begin in Europe, where the day opens with a heavy focus on Purchasing Managers' Index data across the Eurozone. Services and composite PMI figures from Germany and the wider euro area are under the microscope today. The data shows continued expansion in services, but manufacturing remains subdued, highlighting a fragile economic balance. PMI levels in the low to mid-50s suggest expansion, but not acceleration. Europe is growing, but without strong conviction. Markets interpret this as limited upside for the euro and reduced pressure on the ECB to tighten policy aggressively. The most critical release of the European session comes from Eurozone inflation data, a major market driver. Core CPI and headline CPI figures are the key components to watch this morning. We are also looking closely at the Producer Price Index to gauge price pressures at the source. Core inflation remains sticky, while headline inflation shows only modest cooling, signaling a slow easing of pressures. This combination signals that the ECB is likely to maintain a cautious stance, as rate cuts are not seen as urgent. Bond yields remain supported, and we expect significant EUR volatility around the official CPI release. Traders should look for short-term EUR strength on upside surprises, though follow-through may be limited. Attention then shifts to the United States, focusing on labor market and services sector strength. The ADP Employment Change Report shows moderate job growth, roughly in line with expectations. The U.S. labor market is cooling, not cracking, and wage pressure is easing but not disappearing entirely. Markets typically treat ADP as a lead indicator for the upcoming official labor data later this week. The most market-moving data of the U.S. session, however, is likely to be the ISM Services PMI suite. The services sector remains resilient, with the PMI staying well above the critical 50-level mark. New orders stay strong and prices paid remain elevated, showing the sector's underlying strength. Services inflation is the Federal Reserve's primary concern. As long as it stays strong, there's no urgency to cut. This keeps the USD structurally supported, while gold faces significant resistance on any rallies. Later in the day, markets will hear from Federal Reserve Governor Cook, adding potential volatility. Traders will listen closely for commentary on inflation persistence and any signals about rate cut timing. Even subtle wording shifts can trigger USD volatility and sharp moves in gold or equity indices. Be prepared for late-session reversals as the market digests the governor's specific comments. In the final trading window, our attention turns to Australia and its key economic releases. We'll see data on exports, imports, and the latest NABE Business Confidence Index results. Data shows weak export performance and trade balance under pressure, weighing on sentiment. This keeps the Australian dollar vulnerable, particularly against the USD, JPY, and the Swiss franc. To summarize, EUR remains volatile and range-bound, while the USD is supported by services sector strength. Gold is highly sensitive to U.S. data and yields, with its upside capped unless yields retreat. Equities show short-term optimism but remain vulnerable to hawkish surprises and Fed commentary. February 4th is a data-dense session with inflation and services activity at the core. Expect sharp but selective moves. Stay focused and follow your trading plan throughout the day. Trade safe, manage your risk carefully, and stay disciplined in your approach. Thank you for joining us for this Global Market Outlook. We'll see you in the next update.